What's going on, guys? It's Andy here. Welcome back to Painfully Honest Advice. So in this video, I want to go ahead and share with you guys how I made over $7,000 in passive income in my stock portfolio. Plus, because this is a dividend-based portfolio, I'm going to go ahead and break it down and share with you guys exactly how much I make in annual dividends with my current portfolio. As well as, I want to go ahead and share with you guys and be fully transparent my top paying stocks in this portfolio when it comes down to performance, as well as my top paying dividend stocks. So this video is pretty loaded with a lot of information. So let's go ahead and just jump right into it. Now, before we do, I do have a quick plug from my sponsor here, guys. This video is being sponsored by Webull. Webull is a trading platform where you can go ahead and invest with as a beginner. It's a great platform where you do get one free stock when you go ahead and invest at least $100 in your account. Now, additionally, you can go ahead and check out my description if you are interested in getting additional free stocks, because you can get a second free stock with Robinhood, as well as if you do want to sign up for M1 Finance, you can go ahead and get $10 when you sign up with M1 Finance. Now, just jumping right into this video, guys, I am going to go ahead and share with you guys my portfolio with M1 Finance. This is my dividends-based portfolio. Basically, in this portfolio, all the stocks that I have do pay me out a dividend, as well as I do make money when the stock value goes up. So I do make money in two separate ways with my current portfolio. Now let's go ahead and jump right into the portfolio. So I'm going to go ahead and pull up M1 Finance and share with you guys where the portfolio is at and the profits that I've made in this portfolio so far, along with the top 5 performance stocks in this portfolio. So now if I just go ahead and pull up M1 Finance, I do have my portfolio here, which I call my bucket list portfolio. This portfolio is purely dividend-based stocks. All the stocks I currently have in this portfolio are going to be dividend-based. Now, currently the portfolio is up, guys. I am up in this portfolio. And if I just show you guys my last one day, the portfolio is up $354 in the last day, or 0.64%. In the last week here, the portfolio is up $1,148 or 2%. In the last month, the portfolio is up $4,052 or 8%. And then if we look at the last quarter, portfolio is up $5,719 or 13.85%. But here we go. All time, I am up over $7,000 in this portfolio. The portfolio is up $7,085 or a return of 23.08%. So these are my overall gains in this portfolio. Now, guys, I just started this portfolio this year. Basically, when the market went ahead and hit the bottom once the pandemic started, I started investing in the portfolio about 2 months later. At that point, I did feel like that I did miss the boat on investing, but at the end of the day, investing 101, it's better to invest today than not invest at all. So if you are looking to invest in the stock market, I highly personally recommend the biggest and best way to go ahead and invest is to start investing today. That's just one of my pieces of advice as far as investing goes. But now, guys, if we go ahead and look at some of the top stocks that are paying me the most and my top performing stocks in this portfolio, I'm going to go ahead and share with you guys my top 5 paying performance stocks in my current portfolio. Now, the first one may be an obvious if you have this in your portfolio as well, but this is a stock that does pay out a dividend, and it also is a high performing technology stock, which is going to be Apple. Now, in Apple, I am up 90% or $2,380. Now, Apple does weigh in pretty heavily in my portfolio. It is over 15% of my overall portfolio. Now, in regards to Apple, if we just go ahead and look at the stock, the average price for the stock right now is $499, and my average price on the stock is $329. So I'm definitely up on the stock. It is paying out a dividend yield of 0.63%, and then it's got a price to earnings ratio of 37, which is a bit high at this point for this type of stock. But just in general, as far as technology stocks go, usually the price to earnings ratio is usually a bit higher. But guys, here's the other thing with this stock is if we go ahead and look at the overall performance of the stock price, this stock has just been consistently climbing. And since the pandemic, it's just hitting new highs at this point. So overall, in the last 5 years, the stock is up 340%. And then overall, in the last 1 year, the stock's up 142%. But now, just jumping into the second highest performing stock in my portfolio, which is gonna be Lowe's Corporation. Now, Lowe's is a home improvement company. Basically, they have all the products for home improvement. Now, Lowe's is one of those companies that to me is pandemic proof and it is recession proof. Now, in Lowe's, I am up 51% or $102.92. So my current value in this is $623. Now, in regards to Lowe's, they do pay out a dividend as well. And the PE ratio is a little bit lower here. So their dividend is 1.33%, and then their price to earnings ratio is 21.96, which is still overvalued for a consumer stock like this, but I see a long-term growth potential with the stock. So this is a stock that I'm investing in pretty heavily. Now, in regards to Lowe's, another great performance chart when you go ahead and look at their stock price. Since the pandemic, the stock is actually up. In year to date, it is up 53.73%. And then if we look at the last 5 years, it's up about 86.94%. So another stock that was consistently growing and consistently climbing in price. And then after the pandemic, it's starting to hit new highs at this point. Now, guys, the third high performance stock that I have in my portfolio is going to be Nvidia. Now, I personally really like this company. Nvidia is basically one of the industry leaders when it comes down to semiconductor companies. Basically, this company makes chips. Now, this company does have many different platforms. They have a gaming platform called GeForce, where some of the biggest games are made on, like Minecraft, like Call of Duty, or even Fortnite. These are some of the top games out there, and they're all made on Nvidia's gaming platform. Additionally, Nvidia, they're really into AI technology. Now, with Tesla, Nvidia does have a contract with Tesla. So all the cars, all the Tesla vehicles does have the Nvidia chip, as well as there's other companies like Mercedes, like Audi, that are also going ahead and signing new contracts with Nvidia. So I do see a huge growth potential for this company. Now, in regards to Nvidia, I am up 63.96% or $294. And the current value in the portfolio is $1,200. Now, in regards to Nvidia here as well, the price for Nvidia is at $525. And if we look at their dividend yield, it's 0.12%, or the price to earnings ratio is 95.11. But now, just jumping into the fourth stock. The fourth stock is probably going to be a little surprising here, but this is going to be in the financial sector, and it's going to be TD Bank, or Toronto Dominion Bank. Now, this stock, I am currently up a pretty decent price here. I'm up 35.66% or $105.03. As far as the current value of the stock in my portfolio, it's $574. Now, this is a stock that I really see a huge growth potential for, and this is actually a pretty safe stock because with Toronto Dominion Bank, or TD Bank, they've actually been consistently paying their dividends for the last 100 years. And they're a growing company that's growing in Canada as well as in the US. Now, in regards to the stock, Toronto Dominion Bank does pay a dividend of 4.53%, and then their price to earnings ratio is 13.02. So this is a stock that I do believe is fairly valued at this point, and it's a stock that I'm investing in for the long term. Now, jumping into the fifth stock, we're going to be going ahead and going back into technology. And the fifth stock here is going to be Microsoft. Now, with Microsoft, I'm up 34.03% or $367.85. As far as the current value in the stock, I have $1,880 in value in this current stock. Now, Microsoft is another stock that's going to be a bit overvalued at this point, but their dividend yield is 0.89%, or the price to earnings ratio is 39.33. Now, I see a huge growth potential with Microsoft. To me, this is one of those stocks that's currently a sleeper. Basically, once the market catches on to the stock, I see it growing at the same rate that Apple is actually growing at. But guys, these are basically gonna be the 5 stocks that are outperforming within my stock portfolio. Now, additionally, as far as dividend stock